Okay, so what kind of situation do we currently have on USD JPY? Let's make a full breakdown. So starting here on the monthly time frame, what we can see is that the market clearly has tested an extremely strong level of structure support. In fact, the market had found extremely strong demand at this area, preceding all this move to the upside again. The market tested the zone here, preceding this move to the upside again. The market tested its zone here, preceding this move to the upside, and then lately the market is testing, as we are speaking, this area, and it is rejecting it to the upside because, as we have just seen, this is a very strong historical structure support area for USD JPY. Going down on the weekly, what we can see now on the weekly time frame, we can see that clearly the market has created this very long wick test candle, going and grabbing all the liquidity that is at this demand. Now, when a candle is like this, you expect the next candles at least to try to fill in the wick. So we can expect a little bit more continuation to the downside just to go and test this demand. However, we have just seen that the market already tried to go lower and again got rejected to the upside. So we must keep in mind from a monthly perspective that we are at a very strong support area, and on the weekly time frame, what we must realize is that we have a candle that the next one is supposed to fill in the wick. So we have the possibility of continuing lower. However, we don't know if the market already failed to continue lower or if it still will try to go lower. But anyway, that is not our job because, as you know, trading is not predictive, trading is reactive. And how can we react to good opportunities that the market could create here by looking also the daily time frame? Now, on the daily, there are two possible options at the moment for USD JPY, unless the market will obviously create a new structure. In that case, I will make an update. From here, the market will either continue to the upside or it will give us the move to the downside we would like to see to fill in the wick. Now, both these moves provide a good opportunity for the next move, meaning that with students, we are not interested in the fact if the market will actually make a move to the upside or to the downside. We will not be trading the move to the upside or the move to the downside. However, if one of these two moves will happen, then we will have a good opportunity. Let me further explain. Now, if from here the market will make this move to the upside, then what we will have? We will have a market that has created a W formation. Specifically, it will have created a W formation that is testing a very strong supply area. In fact, from here, all this impulse to the downside started. And in general, if you have a W formation in the market, you want to see the market give you a push to the downside to the neckline of the formation. So in that case, what we will be doing if the market will give us this move to the upside is inside of this area, monitoring price action with students, waiting for the market to provide to us one of our valid entries because, as usual, monthly, weekly, and daily are the best time frames for the direction of the market. But the best time frame for entry is the 4 hours. So if the market will give us this move to the upside to go and test this area, we will have inside of the zone a nice opportunity to be looking for a potential short. So with students on the 4-hour time frame, we will be monitoring price action, waiting for the market to shift from a bullish to a bearish market, and as soon as the market will do that, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside to complete the pattern at the neckline. On the other side, if from here the market will give us the move to the downside again, the market will provide us a beautiful opportunity. Why? Because inside of this area, what we will have a nice M formation in this case. So after an M formation, you expect the market to give you a push to the neckline of the formation, aka the previous support, which is now turned resistance. So having a target at this zone. So if the market will make this move to the downside, we will have the M formation testing the support and demand that we have on the monthly time frame, as we have seen at the beginning of the analysis. So a bullish pattern on the daily, testing a bullish zone on the monthly. And inside of this area, what we will be doing with students, we will be monitoring price action on the 4-hour time frame, waiting for the market to provide to us one of our valid entries. And if the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities for the move to the upside and completion of this M formation at the previous support, now turned resistance. So either the market will go to the upside or to the downside. We both have a plan for what will happen. But since we don't have good probabilities neither for the move to the downside nor for the move to the neither for the move to the upside nor for the move to the downside. We will not be trading the move itself, but only the pattern that the market will create in the two cases. Now, before I leave you, let's give a quick check at what we have from a COT perspective on USD JPY. So what the biggest banks and institutions are currently doing on the pair. And if we check the JPY, what we can see. Now, if you check the JPY, what you're actually checking is JPY USD, because all currencies on the spot are traded against the USD. So if you check the data for the JPY, you're already checking JPY USD. And if you want information on USD JPY, you simply have to reverse everything. And what we can see is that with the last report, net positions have again increased. So institutions are shifting their positioning to the long side. In fact, currently we have 52K longs and 20K shorts, meaning that overall on USD JPY we have more shorts, we have more longs than shorts. However, we can see that this disparity is actually increasing since the net positions are increasing. And what does this mean? If JPY USD is getting bought, it means that USD JPY is getting sold, because as we said, we have to reverse everything. So it might seem that this move to the ups to the downside is the most probable, but anyway, trading is reactive, not predictive. If the market will give us this move, perfect. If the market will give us this move, perfect. We know which setups we will be looking for. If the market will remain in this area, at the moment, we are not interested. Now, if you enjoyed this pre-analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you. And I will see you in the next video.